Hello everyone and welcome to another weekly analysis on the ES futures. Today is Saturday, November 26th. We're looking into the week of November 28th. Last week, as described in my previous video, was a low volume and not much action, and because of the Thanksgiving holidays, I fared pretty well. Turned out to be slightly negative because of some poor intraday trades, but on a weekly swing analysis, I did pretty well. Looking into next week, just wanted to call out this head and shoulder information. You can see that's the neck here, these are the shoulders, that's the head. Right around that shoulder area, I'm actually long in my position going into next week because I think we will try to break out of that 40-46 area and test 4100 area, but we'll see. Primarily, I want to discuss with my viewers today is how similarities can be drawn on a bigger time frame. So let me remove these lines from here, and the levels are pretty much the same, nothing much more, and we'll go a little bit more deeper to the level, so we can put another level here on resistance wise, and then the next one is right here. That's too close to what we have in 4300, so we'll find another level. Will be somewhere here. Cool. And if we do break out, from the downside, and I did come out with this 4009 or 4010 based on the high volume nodes for market profiles. And if we look further down, we are going to break down, then we are testing these levels here. And there'd be one here somewhere. And we'll go into the daily charts to look further into it. Drawn some trend lines. That's the bigger trend line, and we only tested the bigger trend line once. That's the secondary trend line. We have tested it twice now, so once, twice. I'm hoping that's why I have drawn a major area there, so I'm hoping it will test that, and hence my reason to go long and test that and then sell off from there. But let's go into the bigger time frame and look into that. So if we auto zoom here, you can look at this channel here. If you see, it's been from 2008 2009, the big bull run, and we have tested in this channel these bottoms only twice. I think that was the COVID. Yep, that was the COVID, and that was the 2018 meltdown because of raising the interest rates. So these are the multiple, I would say, touches on the trend line towards the bottom, but we are not in a position now yet to, we just barely touched it, and if we break that position down, and hence that 36.96 position, if we break that, we do need to test this 30 to 36, and you can see how it is also a good supply level where we had, a demand level where we had previously bounced off from. So hence I'm expecting that level to be touched. With the way the charts are forming now, I am a little bit more bearish, and hence I'll take a bigger bearish position when it touches my price levels. But if we look at something very interesting, and we scroll out all the way to the 1987 meltdown, and then look at that bull run, and that was till the dot-com burst, you could see pretty similar patterns here. So we had a big bull run, so multiple touches there, breaks out, multiple touches, then a very steep climb here, and then sells out here, which is currently where we are, then goes back up, breaks that, goes down, tests that again. So if you draw a trend line like that, hopefully you guys see why I drew those two primary and secondary trend lines there, and that's what is information now. So if it touches that secondary and sells off and touches the bottom here, multiple touches on that trend line, even breaks that whole bottom, and goes sideways, and we don't see this high, break of this high, so that was 2000. We see again touching that in 2007, and then break of that high in 2013. 13 years. Very interesting. So again, I am not here to predict and say that that's what's going to happen. I wanted to draw the similarity and show you that similarity between patterns. Hence, looking at what's happening here, I am expecting to touch somewhere here, and hopefully not hopefully, and maybe break this middle trend line and test the bottom again. Hence, I'm bracing in terms of my account and how I'm doing trading, more on the bearish side. Looking at what the market is saying on the VX futures, so obviously the futures is really not in a backwardation, it was in contango, so that means market is expecting a lot of volatility going into January all the way till August 2023, peaking at July. And this obviously changes. These are the spot prices, so this obviously changes. So we'd know more about it as the market develops into next year. Quickly going into the daily charts, let's look at the 1-year daily and figure out if there are. Okay, so looking at daily charts, that's one of the reasons why I had 40.46, and there's a gap fill right there, 41.06. So I'm expecting that gap to be filled, and then there is another gap fill here, which is 42.26. Not sure if that will be filled this time, but sometime in future for sure. Is it immediate future? Don't know. Very difficult to figure that out. There is a gap fill here, 38.20, and let's see. There is in the yearly there is no other gap fill. Let's look at 10-year 1 daily. So I'm just trying to scan here and find out any gap fills. Don't see any. The only one that I see is out here, all the way here. Yep, that is here, and that's way far out there. So, and then another is here. So, oh, and another one is here also. That's very far away. So I don't know if we'll reach those levels. Then looking at the hourly, let's go to that, and we could see that holds clusters of sideway movement, and then it breaks out of that sideway movement. So that's like 39.91. It breaks out of that, goes all the way to the top from where it got rejected. Now it's making a sideway movement there. So usually that tells me either it's consuming all the orders, the sell orders, the supply orders from there, and then just will break out of that. And that's what, looking at the where the other shoulder is information and how the trend lines are there with the gap fill, I think it may break out of the last week high of 40.46 and test at 4100, and then market breaks down. But if that does not happen, it breaks down from that level. So that big 6-hour green level comes to that 4009. from where it really pushed up. So I would wait for, 4021, 4020, 4015 to be broken down. And if that happens, then I'll not take any trade. I'll just wait for 4009 to be tested and enter long again, targeting that level. That's what I would plan for. And not big change if you see. It's just like a 30, 40 points. That's how the market is. Sometimes it only gives you a few points, sometimes gives you a lot of points. And all we need to be is on the right side of the trend. The current trend, if you see, is up. So we should be, I am in the right side of the trend. When something, a breakdowns happens, then, so let's say this happened, you never participate in this breakdown, but in this small pull up, the trend is down. So you could then trend in the right side of the, with the right side of the trend direction. If you're doing more on an intraday basis, you can, like, let's say this was the trend, you did not participate, there was a breakdown, then you'd obviously from your levels, that is here, you trade from level to level. Will I be able to catch the total bottoms and the tops? I have never been able to do that. I usually enter into the trend direction somewhere in the middle and get out somewhere in the middle, and I keep doing that and taking profits from my trades. That's all I had for next week. As always, keep your stop losses small, your losses at small size, and your profit at large.